This is an accounting wine adventure of Nadia, Nikki, Radi and Vesi. It all starts here. This is Nikki, a young manager doing accounting classes. He is about to take a life-changing decision. Let's see what the decision will be. Together with his peers, they decided to start producing white wine in Bulgaria. Bulgaria? This is a small, beautiful country with a population of 7 million people and potential market of white wine more than 60 million bottles per year. They decided to name the winery Ava Valley. Let's see what the winemaking process is.
First, we buy the best grapes from special varieties for the good white wine. When the grape is in the plant, we begin with crushing and destemming. Then, we press the juice from the skins in our modern facility equipped with high-end machines. After a while, the alcoholic fermentation is finished and the wine is clarified from sediments, so we can continue with filling and bottling. We fill in the bottles with the ready white wine and then we put the tops, but no, not the plastic ones, they just ruin the taste of the wine, it's no good. We better use good, traditional, real cork. The cork and all the materials we use are produced locally. After storing the wine bottles for a while to improve its quality, we are ready to start with labeling it with our brand Ava Valley. As you see, we comply with very strict standards and deliver excellent quality through manpower.
But before our product is ready to hit the market, we apply process costing method to determine cost per bottle of white wine. First are the direct materials. There are approximately 1.40 leva. Grapes, even better grapes. Bottle and label. Cork and capsules. Then direct labor. It is approximately 0.30 leva and it covers 20 seasonal workers. Then we have the manufacturing overhead. They are approximately 3 leva and include the cost for the factory, which is located outside of Sofia and is rented. The depreciation costs for a bottling machine that we purchased with a 7-year bank loan amounted at 800,000 leva. Utility costs for electricity, water supply, etc. And non-manufacturing overhead costs per bottle, which in our case are approximately 0.50 leva. They include advertising costs, fees for participating in wine exhibitions, and the cost to hire a sommelier, who is very important for the good image of our product. Now we can come up to the total cost per bottle of Ava white wine, which include all previously mentioned costs and which equal to exactly 5.11 leva. If we look into the costs from another perspective, we have variable costs and fixed costs.
After all that, we have to take a decision on the selling price. We did some research, we compared prices, we approached our prospect customers, and we set a price of $8.90 per bottle, which we believe will be attractive for our wholesale customers and will be a great deal for them. So, what's in it for us? A net income after tax of almost $500,000 level.
Let's consider some other important metrics. The contribution margin ratio is more than 73%. In case we increase our sales with 10%, our net income will grow by more than 70%. To reach a break-even point, we need to produce and sell 58,000 bottles of white wine. As for the revenue, we will start making profits when we reach and exceed 500,000 level of sales revenue. In a full operational year, our margin of safety will be almost 60%, or 720,000 level. Well, it is worth it.
All it takes is some planning. During the first year after the launch of our wine production, we reached 140,000 bottles at the previously determined price, as well as the whopping 1.25 million of sales revenue. We operate in stable economic environment with an average annual inflation rate of 3%, which of course reflects our direct materials. We sell in bulk and achieve a steady sales growth of about 10% per year. With higher demand for our product, we can afford to rise the prices as well. Thus, by the 5th year, our selling price reaches $9.50 a bottle. We now sell 187,000 bottles and we employ 27 seasonal workers. So what if we reach our full capacity of 200,000 bottles? Our income will increase by 7%. To justify our investment in this project, we estimate our NPV at 200,000 level, considering the initial investment of 800,000 level, working capital of 450,000 level, net cash flow of approximately $1.5 million, salvage value of the equipment 300,000, and depreciation savings of 25,000. Thus, the return of our investment is over 13%.
This is not the end of our adventure. After 4 years and 8 months, we have more reasons to celebrate. It's time for payback.